Hey, everybody, welcome back. We've got another TA report with Bags and GP and Jeff, DI, and Nick. So, sometimes I wish that we just hit record when we first jump on these calls because we kind of go over a little bit of everything for maybe 5 to 10 minutes of what we're going to say. And some of this is our best discussion. So I kind of want to just go straight into where we were at. We were talking about the ultimate destruction of the stock market, thanks to Nick. Nick says we're going to zero. No,
Nah.
he didn't. But I do kind of want to just get into what we were sort of chopping up with, how we all three have completely different ideas of what may happen in the intermediate term and even longer term. So Nick, I'm going to kick it to you to just start going on what you think's in the S&P or the SPY, and then GP and I are going to just jump all over you.
Yeah, well, I mean,
that sounds good.
I'll pull up the cues because I think that's what he was going to talk about anyway. Can I do a screen share here, or let's see? Or am I not doing it? Am I not doing a screen share?
No, you can.
You can, just not yet.
Did I not?
Oh,
there we go. You should be good to go now, Nick. I didn't unlock the screen share for you. So
okay.
Podcast / YouTube faux pas.
Well, so when it comes to looking at charts, I like to write out a lot of if thens. And when we're looking at pull up any name, we know what patterns look like, and over time you can kind of start to see things kind of forming before they form, or you know what I'm saying? Like the longer you look at these, you could have had a trend line from here to here with the line here to here. You just kind of see like an ascending triangle, or just like a range, whatever. So anyways, when I'm kind of just going through my kind of if thens, I try to think about kind of max pain first, like where is it least likely to go? Where's price least likely to go?
Well, I've got some commentary on that once we get to max pain in a minute, but please continue.
Yeah. So I just thought, I was like, let's just look at the cues. It kind of looks like an inverse, a head and shoulders just forming. The reason I say that is because we no longer, and the trend is, the general trend broke. We no longer have made higher lows like we did, here, all the way up. So it's just a little bit of a character change. So I'm thinking, all right, so we had kind of a, wild week last week as far as selling down to rallying higher. What's to say we don't just get kind of like another shoulder to form here? It does break down. We get this next leg down, and you're going to have everybody out there who's not like currently kind of bearish. You're going to have everybody screaming, we chop sideways, rally higher, kind of throwing a handle and then climb. I mean, this is kind of far out, obviously, but I'm just thinking like with a head and shoulders forming here, and it like the measured move on that head and shoulders pattern completing down here around 300. You've got the round number 300. You've got a right shoulder measured move completing around 300 if it does form. That'd be kind of a nice range, like a 300 to 400 range. I mean, that sets up like when that breaks out, that sets up your move from 400 to 500, like no problem. Sorry, I'll keep ranting if you want.
No,
if you guys got whatever. I'm just saying, like I like to think about how ranges and patterns, like you start to see them kind of forming. I'm also like pretty much in cash, so I would like to see more of a sideways action happen to allow all these stocks that have gotten absolutely decimated to build some bases. I mean, I want to see some setups. Like I need more setups than just trying to catch a, try to catch a bottom off of like a support bounce. Like, I don't know. Just my kind of 2 cents.
So
obviously I'll trade the market that we get.
Yeah.
It's like when I'm going through these if thens, like I only do them so that if they start to kind of play out, I kind of have like a game plan.
Yeah, and I think, Nick,
But,
you've also explained, right? Like you want to trade the trend, and the trend is definitely down right now. There's no doubt about that. But I think when when I look through sentiment this week was just almost as bad as last week. I think there's maybe a couple more people pulled to GP and I's bullish thesis. But I don't think it's as bullish out there sentiment wise as what it has been, even in December, and it got pretty dark in December. But right now, this is the thing that really teed off this whole topic was, the tweet that I shared and GP shared it in our Discord that, small traders put on 6.5 billion into puts last week, the highest ever. And coming back to Max Payne, that shit's going to zero. I mean, I have I have almost all confidence that retail spending that much money on small puts isn't going to end well. That's just my 2 cents. And GP, I know you've got something to add to this, and I'll pick up later.
Yeah. So everyone sees the end of the world coming, and everyone's got puts, and you're hedged to the downside. And in the past, we've been in this position before, and what's usually resulted is, I think I talked about this the last time, which was we just experienced the negative gamma squeeze to the downside. The reverse is what happens to the upside, right? So what I'm watching for over the next, I don't really care about a week action here. We could test 316 and still be in my theoretical kind of area of on the cues. I mean, on an area of where things are going in the future is we're most likely going to see the opposite of a gamma squeeze. If it's not February, it's going to be March into OPEX 1. I think you're going to see a relentless, say uncle to the bears kind of rally in the markets here. And I think people are going to be fighting it the whole way up. And so I've never seen retail win consistently. And I think we talked about this in a long time ago. This was back in 2021 when all the meme stocks were winning and people were like, hey, I just bought $10,000 worth of some shit coin or something else, and it just went up 17,000%, and I'm now a millionaire. All those people are gone, wiped out, gone, right? You got like a month of it, and then you haven't heard from them again. I remember having this conversation with a friend of mine. We're like, what are you expecting to see with AMC? He's like, oh, it's going to short squeeze to 4,000 or whatever. And I'm like, yeah, good luck with that, right? Wall Street knows they got caught. They won't get caught again. So you're most likely never going to see those highs again. So I wish you the best, and I hope it goes to that 4,000 and you become a millionaire overnight. But this stuff doesn't happen. So I'm just in the camp that you're going to gamma squeeze. This is market dynamics. This is not. And then if you're looking at like indicators and stuff like this, like some of the indicators are so in the crazy bearish camp that it's almost bullish. Is like, I think if you're looking at Amazon's one I was looking at on Friday, the MACD is negative, I think 30 something or something like that. So the fuel that you have for a lot of these stocks in terms of where these indicators could go and still not be overbought is that much higher, right? So my general thought process is this is the shake before the bake, and I'm talking about this big old bake. I'm not going to make any predictions like I have the last couple of last couple of videos.
Come on, go 3 for 3, GP. Come on.
No, I there's people get humbled quite often in the markets, and I just know they can go any way. That we could even gap down, as people have suggested. That's the max pain, is a gap down, and
Yep.
I'm like, no, that's not the max pain. Like, everyone I know is buying puts. People are contacting me about, hey, what should I do about the markets? Should I be selling out and stuff? I think Bags, you even sent out an email about your mom, right? And my dad's calling me, and all the what's it called, the conspiracy antennas are already up for everyone, so you generally don't have market crashes when everyone's prepared. That's my top.
Is it really that bearish out there?
It is. So,
Dude,
Holy shit,
you know,
Valley.
I have been monitoring sentiment nonstop for the past 2.5 weeks, basically. And just over the last month and a half, since, before the December holidays, TikTok. I love TikTok for so many reasons, but all the stock geniuses and crypto geniuses, like, they are gone. They are poof. They are no more.
Really?
Which
Right.
don't
someone
get me
call
wrong.
it the search party.
Don't get me
I'm
wrong.
pretty
Don't get me
I'm
wrong.
pretty
There are still
disconnected. So
there are still a lot of stock talk getting posted, and
Oh, sure.
the overwhelming majority of that is negative, or it's making fun of the furus who used to be around and now they're gone, touting their services, right?
Sure.
Here today, gone tomorrow. So I'm not just using TikTok as my sentiment indicator, but look at stock twits, look at Twitter. I mean, people who are normally bullish or in the bullish camp are hedged, or are, I don't know what's happening in the market, and I don't know what's happening in the market. I'm not going to pretend to say that we're bouncing here and we're going to rip to new all-time highs by the end of the week. I'm not making that at all. I still think, to your point, Nick, the downside is still the easiest way to go, but how much further are we going to go is my whole thing. I think Monday's huge wick down was an eye-opener for a lot of people, and we came back and we actually finished up last week on the SPY, and I think the Q's the Q's up 0.03%. So even with all the fear and all the selling that happened last week, we still finished positive by hair. I wrote about this last week that, this is bear market stuff, right? This is bear market rally type shit. But we haven't gone through a strong bear market since basically the COVID crash, right? Like, we've had the run of the mill pullbacks. And when you really look at this thing, I think at the lows, we reached 10% or so on the S&P. I think the Qs reached like 18% or thereabouts. So, you're expected to see more volatility and more up and down in the high growth tech names than you are the normal S&P. So I'm not, clutching my pearls. I'm not looking at the world going to zero. Is it a possibility? It's always a possibility. Anything's possible. But I don't see anything that sets up way outside of kind of what I expected. Last week, right, we were talking about the Fed and the Fed decision. And I thought for the traders, for the market to choose a direction, I thought the route that the Fed went was the worst way to do that. So I described it as hawkish. It probably wasn't hawkish, but it was just not giving the market a direction, right? By saying, well, we're going to reevaluate in March. Everybody's expecting however many rate hikes, and everybody's expecting however many, points are put back on the rate over the next 6-7 meetings. Could happen. Jay Powell didn't tip his hand. I would have much rather him come out and say, this is what we're doing, or this is the timeline we're doing. But he doesn't want to be, he doesn't want to be front running something that he might have to walk back. So I totally understand it. And I just think everybody is so damn afraid of what's going on. We're probably going to be in some type of chop for the next couple of weeks. And That's okay. That gives me an opportunity to pick at things that I want to have in my portfolio for a longer term.
Yeah,
Okay.
I mean,
Okay, I'm done.
especially like on the bigger name, like I like to, I'm gonna pay attention to a lot of like the main, if the indexes kind of hold up and we do see that chop like you're talking about, it'd be great for like huge names to pull in and get a lot of these bigger names at like round numbers. Like, I don't think it'd be out of the question to see Tesla like 500, $600.
So I'm
You know,
going to
like
share my screen while you talk because I
Sure.
want to go over something, but you can finish there, Nick.
No, I'm just saying, I think that I think on the short term, like we're due for a counter trend bounce here. A lot of like stocks, Tesla, for instance, hit a short term measured move at 800, along with some others. I just, I'm not quick to like try and pick a bottom either. Like I generally know what to look
Sure.
for and what I want to see for a bottom to form. And like, again, just subscribing to O'Neill's, how a bottom forming with a follow through day. Like if you're just patient enough to wait for like something tradable, I don't know. I think you're better off.
Yeah, no, I
So
hear you, Nick.
I'm definitely not bearish by any
I,
means,
I hear
especially
you
long
for
term. I
sure, right?
just,
Like bottom,
yeah,
unless it is just an immediate V bottom out of something, it takes time for a bottom to form, right? It doesn't just,
sure.
it doesn't happen usually in one candle, though it can. And, just looking at, I don't know if you guys watched the conversation that Cookie and I had earlier last week, but, we've got these things happening, right? We're rolling over a little bit, and that's okay, right? Like the EMAs are rolling over, but we still held the 50 on the weekly, which is kind of doing that number. It'll eventually roll over too. But we've got weeks before anything really squeezes in there and
Yeah,
creates that bottom, what you're talking about. And then, lo and behold, we're in March for the next Fed meeting way over here. Right. And I'm not saying all these things are going to line up, though they could. That's all I'm saying. So I don't necessarily think that I'm looking for this number to happen, right? Like, I don't think that's happening, but
yeah.
it could. I don't necessarily think that number's happening, though it could. I still think the most likely direction is some sideways.
Yeah.
So GP, I think you have a little bit different take than that.
Yeah, he does.
I don't
he
even
does.
know. So I will stand on the side of that was probably the most dovish Fed outcome we could have had from that meeting, right? To me, you had every opportunity, and I'm assuming they're seeing data that none of us are seeing, right? Is that inflation maybe is coming in or whatever it is. So or the economy is starting to falter. So they're like, if we raise rates, you're going to hurt growth and put us into a potential recession and cause some more issues. So you had this opportunity where, if you remember, when he came out in November, we had that Thanksgiving sell-off. He was like, I'm going to double down on this rate hike stuff.
Yep.
I'm going to taper. I'm going to double my tapering reduction, all this stuff. He was real hawkish. And now you have this opportunity where everyone's like, there's like 30 rate hikes coming this year. We're all of a sudden go from 0 interest rates to 10% interest by the end of the year, because everyone is great at assessing this, right? They know better than the Fed, and the Fed has maybe had some small missteps and they've easily corrected. 2018 is probably the best example of their misstep. They hiked, I think, 4 times for a total of 1/4% or 0.5%.
And Jay's not going to have to walk something back and have egg on his face again, like he doesn't know what he's doing and talking about.
Yeah, that's my point. And then look, even during COVID, their first strike was the $770 billion rescue package on March 16th. And then the market literally said, F you, that's not enough to save us. And we dropped another 20%, right? So that's what happened in March 2020 COVID. We dropped another 20%. And the day we bottomed, do you know what he said? We got your back unlimited. That's what turned the market, right? So you have this, the Fed has made mistakes. I'm not saying that they haven't, but they've course corrected fairly quickly within that March COVID period, which is within a week. They said, okay, you're right, 770 billion isn't enough. The market's telling us, the economy is telling us all this other stuff, and we're about to go into lockdown. And your mind says the country is about to go into lockdown, this market is dead. What do we do from that? We literally never saw the lows again, right? So
I want the type of friend who says, I have your back unlimited.
But that's exactly what the Fed has done. And here we come into this Feb meeting where they've been kind of really hawkish, and all of a sudden they're like, no, we're going to be a little cautious now. We haven't had a schedule. We're not sure when we're going to reduce our balance sheet. And so to me, that was probably one of the most dovish kind of meetings we've had in the last couple of months. And that tells me that they're not ready to raise rates. So why is the market already discounting that process? I know it's forward looking, but I think it might have gotten ahead of itself, whatever. I don't care about any of that stuff. Ultimately is what I'm watching in terms of price action is things are holding where they're supposed to, right? I think I pointed out Amazon broke the box. Where did it close by the end of the day? Closed right back into the box. So on a week to week basis, you didn't break the box. Roku bent, didn't break. Square bent, didn't break. Everything kind of bent, didn't break. So people have obviously come in and found support. And I'm not going to say we're going to have this insane rally, even though that's what
that's what you said before we started recording.
Yeah, even though, because I'm not a financial advisor. I don't want you to be like, hey, GP said it's going to go bananas, so I'm going to put my entire life savings and mortgage the house, because that's not what I'm saying to do, because the price action still has to represent the theory that I have in my head, the back of the brain kind of math, right?
This is not financial advice. This is not financial advice. This is for educational purposes only. Educational purposes only. This is only our opinion.
Yo, but when you do get the green light with like all indicators saying go full load, can you like let us know?
Yeah, but the indicators are never going to say that because they're so oversold, right? So I'm going to share a chart, right? So I can show you.
I just want Nick to know that I marked his 300 level on QQQ right there. I'm going to call that the Nick bottom.
All right, cool, perfect.
Go ahead, I did 315 level in there too, but so I'm just going to share my screen here. I don't know if you're ever going to get.
I mean, I'd be fine with 315. Like, just say, just do 3 to 315 the zone right there. I mean, I'd definitely start buying at 315. Anyway, sorry, I didn't mean to interrupt.
Can you see my screen? I can't see it on here.
Yeah.
Okay.
Yeah.
So you see stock twits right now, right? Is that what it's called?
Yeah.
Okay. So
he's been
here.
twatting.
So here's Amazon, right? If you're looking at the screen, this is Amazon. And I don't put a lot of faith in indicators because they're usually lagging and stuff like that. But when they're this extreme, it's tough to start paying attention to, right? Like, so on this side, when you had the MACD sitting in like the 300 range, and you thought Amazon was going to continue to
the lowest reading of all time?
This is a weekly chart too, right? Take a look at that. Is the lowest reading of all time. And to me, what this is saying when it's this extreme is that you have so much fuel to light it up to the upside that it's kind of unbelievable, right? Like when you have so same thing, right? Like here you had so much fuel to the downside, and what do? We faked out a bunch of ton of people bought, leaps, and they got smoked out. They got absolutely destroyed. But you were so extreme on this side that the only way here, the risk was to the upside, not to the downside. But when you're sitting here, when you're this far like oversold, and forget the indicators, what did the price do? By the end of the week, it closed right back into the box. It
For
closed
sure.
above that 28.71 level. So your indicators are saying, cool, this is kind of extreme, but then price action kind of represented that as well. So I think that's what you got to keep in mind. Like, you can be bearish, you can be whatever, everyone's entitled to their own stances, but I'm not there.
Well, I just so happened to write about Amazon today. I don't know if you saw that.
I did read it before. I tried to do my homework before, so I know
Well,
what you're thinking.
thank you for the
Yeah.
support. That friends got your back unlimited. I love it. But no, I mean, I have an all-time channel going across the bottom of Amazon, right? And only 7 times in history has it went below that channel bottom, and we're in that period right now. Of the 7 times, 2 of them have been greater than 15% below the line. The other four other times, and the one we're currently in, is 8 to 10% below it, and the only other time was less than 5%. So it tells me if Amazon stays true to its channel, just using the price, right, and the trend, if Amazon stays true to its all-time channel, this is probably as much as Amazon's going to give back. Now, it does have earnings this week, and we all know that that's a crapshoot. But at the same time, look at what Microsoft did for their earnings. Look at what Apple did for their earnings. Amazon's in a little bit different situation, undergoing, right, the new CEO change, and how maybe consumer behavior has changed by buying more Amazon. I just don't know. I don't really necessarily see this being one of the 2 instances where it goes below 15%. So I'm in your pro Amazon camp, GP.
It's not just Amazon. I'll show you some other charts too. But on a side note, the game is tied.
Oh yeah, the Bengals and the Chiefs. Yeah.
It's good to see young talent getting.
Is Joe Burrow related to Jay Powell because they call him Joe Burr? Money printer goes.
Maybe it's a long lost nephew or something like that. Who knows? And maybe he's telling you what's going to happen with the markets, that the Bengals going to be upset and the Bulls will win. No, I don't know about any of that stuff. I'm not making that prediction, but there's a lot of stuff here that tells me that you're going to be on the wrong side. If it breaks down here, cool, I'll get out. This is what I said the other week when I bought it at 28.54, and then I added again around 27.20, is that the risk to the downside to me is not that heavy in Amazon. And
what's the other charts you got to look at though?
Yeah, so the other one is so everyone's talking about Kathy, right? And the hate on Kathy is,
and Kramer pumped Sark, so
he did not.
Yeah. Thursday, Kramer was all over the short arc innovation ETF.
That was super sarcasm. If you I know that was what was going on, but I watched the clip. I think he was being quite sarcastic. So I actually like Kramer. He doesn't make all the great calls. I think he's actually a trader trying to be an analyst, and he'd be better at being a trader than being an analyst. But that's just me.
I like Kramer too. He just catches all kinds of hell, and
but you put yourself in the limelight. That's what's going to happen. Look at Kathy, man. She's gotten.
Look at us doing YouTubes and shit. Like we're just waiting for the Rotten Tomatoes and lettuce being thrown at us.
I'm waiting for all the racist comments to come too, so that should happen soon. But yeah, here's the other chart for me. Is this is the short arc chart, right? So this is basically, since I know the correlation's not there, and I've been told a bunch of times about it, but ever since this fund started, it's been the beginning of the end, right? So this started on November 9th, and growth has just been destroyed, right? Yep. So it's gone from 30 to about 653, so it's nearly doubled. But what do you see in the last couple of days, right? Do you see those 2 big wicks? Right, on these 2 red candles, you see that volume too? That's some big kind of warning signs to say that Kathy might have been beat up and dragged through the mud, but I don't think she's dead here. And so if you have these Kathy stocks, the Zooms, the the Squares, the Rokus, the maybe not Tesla, because I think Tesla might actually need some breather, but
Man, pummeled.
The Mark Twain quote, right?
Yeah.
My death has been, the reports of my death have been greatly exaggerated.
That's just I think everyone dies shortly in the next 6 to 8 months or whatever it is. But for now, this is talking about the next 4 to 5 months, where we are by, like, let's say the end of the second half of this year, right? This is not a trajectory for lifetime stuff. But what I'm seeing is that while the death of Kathy is quite often talked about, and the Kramer clip is going bananas and viral here, you have two big volume kind of sell candles here, and wicks off the top, right? So tried to break out here, rejected. Tried again, rejected. This is I think I shared about the Apple chart, right? When it tried to hit the 3 trillion, the first thrust up was expected to reject, get a little consolidation, try for a second thrust up, and then reject, and then come back down and consolidate. So my thought process here is the second thrust got rejected here, and we're gonna see this come down, which inherently means the Kathy stocks should start to perform better or outperform. Right?
That was my bad. That was my mom calling to see if she should be buying puts.
So did she buy puts? That's the question.
Hey, what do you think of?
I'm
what
not
do
a
you think of
financial
Shop?
advisor, but I said no.
That's probably the right answer. What do I think of Shop? I think
Yeah,
if you're not
Sure.
buying Shop here, when the hell are you ever gonna buy Shop?
sure. That's kind of what I was thinking. Like I was like 800. You know, you got again 800 round number. It's a 50% correct. It's a 50% haircut off the fucking highs. Oops, I just swore. Sorry.
Yeah,
How
Here-
dare you?
here I will show the chart that I have for chart. I've posted on StockTwix as well, but this is
Oh, right
Shop.
on.
This is Shop Weekly, right? This
Yeah.
is the megaphone pattern. Like it's seen it before, and then what's it done after it's kind of had an indecision candle,
Rant.
Yeah.
right? Sorry, oops. Indecision candle. What has it done? This was 300, and what, only tripled in the next month and a half, couple months. This was March, so no, 4 months.
Yeah.
'Cause this is a
This
weekly.
baby's going to 2,000.
I mean, that's kind of what I was thinking, maybe a 2K magnet in 2022, you know? So I guess we'll
Yeah,
see.
so I look how, so this line here, I keep it on my charts because to me it's important, is the comparison line of the NASDAQ composite, right?
Oh,
So
sure.
the
Yeah.
NASDAQ composite has obviously had a downtrend here, and it didn't have one last week, but it kind of went flat there, right? So that's the first kind of indication of a trend change if you're watching for it. Whereas you see there's not, like when it has downtrends, there's not. So there's a potential kind of change here in terms of the trend between the two different, like NASDAQ composite and the Shop. So it's obviously really kind of diverted from NASDAQ composite action. So you should at a minimum see a mean reversion to around the 1200 area. I think this is part of the megaphone and it held. Look where it held. It held the prior pivot.
Yeah, totally.
This. So, like, if you're not willing to take a shot here with the potential stop, with the stop of what was it, 780, then like, at what point will you? Are you magically waiting for 300 to come, or maybe let's say 128? Why not just go back to 2000? Like, so you got to take the chance, and then you got to establish stops. You can't just buy here. Like, we're in a downtrend for sure. If you're buying here blindly and you don't have like a mental kind of stop, you don't have to have a full stop. But if you don't have some kind of stop in your head saying, hey, dude, I've lost 10% on this. It was a valiant effort, but the market doesn't agree with me. So I'm going to take my loss and then see if I can buy back in much lower.
Yeah.
Then like, when are you ever going to invest in this?
Yeah, that was me at
For sure.
1,000. But what I really want to know is, Nick, have we converted you back to a little bit more bullish?
Well, no, like I said, I think like I mean, I think a counter trend bounce is coming for sure. Like the McClellan is the only really oscillator that I look at as far as being like in terms of being overbought, oversold, and it's like clobbered. Like like this would be a screaming buy opportunity. The only reason I am kind of in the camp that I'm in is just being that we kind of like spike these lows pretty hard and on volume. And so I just kind of like, in terms of, entries, I mean, it's not, I mean, I guess how often do we see like a crazy like V bottom rip? Usually we'll get some form of setup, price will, shop, for instance, like price will rally up to 1,000 or 1,200, pull in, base a little bit and then start another leg higher. So I mean, I'm just saying, like, I have a better odds and an easier way of defining my risk, I think, when I feel like the trend has changed rather than just trying to snag a V
I hear
bottom.
you.
For sure.
I hear you. Do you see?
I mean,
so I just put up the McKellen oscillator on my shop chart. What I find odd here is this is now the monthly, but here's the weekly, right? Like the weekly obviously has gotten absolutely destroyed. But then if you look at the monthly, that's an interesting spike in the oscillator, right? On the monthly.
That is.
I've never really used that oscillator. I've only used like so like I use the NYSE, and it's like just advancing issues versus like.
Hey, GP, pull that up on Amazon real quick. I want to see what that looks like there.
But anyways, okay.
No, keep talking, Nick. We're just pulling.
Oh no, I was just simply stating that I haven't used that. I use the McClellan as more of like a timing tool. On the, I guess I would say the indexes than individual stocks. I've never pulled that up on an individual name before.
It's similar on Amazon, right? It's a spike up on the McKellen. On not necessarily the weekly, but on, I don't use this indicator, so I don't know what it says. I've done a little bit of research here and there, but
it's definitely
my charts over time.
Yeah.
What's that?
It's definitely interesting.
It's a divergence, right, of some sort.
Yeah.
On monthly,
and even on the weekly, you're seeing a higher low made in it, right? So yeah. And how do we look at the end of 2020? The indicator is indicating a divergence.
So this is how we were in March of 2020. We're here on the monthly. So I have no idea what this indicator means. So I'm not going to even try to figure it out.
Bullish.
No clue.
Yeah,
man.
the chart on free stock, or what used to be free stock charts, it was a T2000. I think the ticker is T2106.
Okay.
It just kind of looks like a stochastics box, but on a standalone chart.
Yeah.
I want to get a nose ring and start snorting and just bullish.
I mean, I hope so. Like, I'd love to put a lot of money to work. So, I mean, if we start to, I don't know, if we start to rally, I'm in.
So you guys, I mean, and GP, I know you subscribe to my weekly newsletter and piece that I put out, but for, I don't know,
throw my email on that list. How come I don't ever?
I don't know why aren't you a friend that just unlimited has my back, Nick? I don't know. That's a great question.
I don't know.
Just go to my website and there you go. You can get it every week. But anyway, enough about that. Since I think around right after Thanksgiving, I've made the statement, like, I'm not interested in buying tech right now, right? I'm not interested in buying tech right now. Well, I think some of them, and I put some money to work in AMD last week, so some of them are actually becoming quite interesting to me. And one of my favorites, Salesforce CRM. I'm gonna take the control back here.
Yeah, I was just pulling up the charts for you, but yeah, take it back.
Salesforce really is interesting to me. Not just
Yeah.
from the chart perspective, but also from the chart perspective. If I go back from the beginning of time and use my channel, which I love doing, only once has it breached the bottom part of the channel, and that was during the COVID crash. And we currently wicked off of that bottom there. And I actually looked at some flow to sort of confirm my thesis, in hopes to confirm my thesis, I should say. But last week there was over $2 million in premiums spent on either 230 or 240 leaps. Now, some of that was hedged as a spread, or I shouldn't say hedged. Some of that was a 210, 230, and 240 spread, but still it was well over a million. I think 1.2 million was used just to get long leaps in Salesforce. And, if I look at the weekly, it's still, I mean, it's a bear flag till it isn't. It's a downtrend till it isn't. But when I go back to the daily, this guy fired off a green TRM candle, and shout out to TKP Trader. This is one of my favorite indicators that I have on my charts. But we're back above the 9 and we're threatening this zone. And to me, coming back to what you were starting our conversation with, Nick, to me, this is what looks like the forming of a bottom. That doesn't mean that is the bottom, but to me, that's the bottoming process, right? And it could absolutely do this and then decide to go up or down, whatever it wants to do. But this is the process you expect to see before a decision is made on what the price is going to the action of the price is going to do. So I really like that it closed at the high of the day, which, several tech names did. But at the same time, I mean, Salesforce up 1.6% from the week when it hit one of its lower points. And, if we just go from the breakout, look at that. Wow. Interesting. So I really like Salesforce right here. Salesforce is one of my highest conviction. I like to look at different sectors, and the enterprise, as we know in this environment, businesses have to get smarter. They're not hiring everyone in the world, right? Like, yeah, people need more jobs, but at the same time, it's to optimize what you already have. And Salesforce fits that description in spades. So I really love Salesforce here. I didn't mention it on my email earlier today, but I already got a nice position in it, but there's nothing that would keep me out of even adding some more down here.
Fun fact, I've never owned or traded Salesforce. So that's interesting to see. I'll have to take a look at the chart after this, because I see what you're seeing. So I'm now curious.
Yeah, if you want to pull up your version of what, I know you haven't charted it since you haven't traded it, but I find it always interesting to see how other people's layouts of indicators, whatever, and what their response is to something that they don't trade. But I like it here. I'm not saying this is the bottom, but I think the bottom process is happening. And I expect to see that in more of some of these names. To your point, Nick, right? Like, we're maybe not expecting a V bottom out of it the way GP might be thinking of some of these could be.
Whoa.
Well, didn't you say go all in on calls?
No, that was you.
Oh, my bad.
I have calls out to June in the Qs and the SPY. I've been buying on the dips because I think we do move higher. I'm not worried about 1 or 2 weeks price action here.
Yep.
I think the chart that there's a few charts that kind of stand out to me, and I've talked about them, is why hasn't the 10-year TNX rates taken out 2020 highs based on how hawkish everyone is and how many rates we're going to get this year? we're still struggling to take out, and I'll share my screen. Am I already sharing?
No.
Am I sharing now?
Yes, you are.
Yeah. So to me, this was 1903 was the 2020 highs. And for what I still think rates are going higher by the end of the year, but short-term action right now is telling me we're struggling to break out of just the yearly candle. And once we break out of that yearly candle, I think it's game on for rates. But as of now, we are.
You see the data?
Now, what's that?
Sorry. Nothing. Sorry.
No, go ahead. What were you saying?
No. Keep going.
So right now we're still sitting here struggling, right? Like we can't even get back to the highs from last week, and you have this apparently a very hawkish Fed, according to many people on social and stuff like that. Yet rates are still struggling to push higher. So I think here the way I look at this chart is that you're going to get a dip down to somewhere around here before we actually start the bigger uptrend here. I think we're definitely.
Is that the daily chart there?
Yeah, that's the daily chart. Yeah. Right. So if you're looking back at the daily, we're still under this kind of supply zone. So we got to work through some of the supply zone, and we're going to see it come back here and kind of oscillate between here. We've already had a little bit of supply clearing here, and then we have a little bit more, and then we see moving out, and we start a new trend in the rates, which if you're going back to the monthly, you can see we're on the verge or already kind of broken the downtrend. But the first break after a 20-year downtrend is usually not the one. You know what I mean? Like it comes back, it'll whipsaw people out. If you're looking at like this kind of the longer term downtrend, it's still there. But if you're looking at more of the short term, it kind of broke. But I think you're going to oscillate between this kind of level for a little while, and then you're going to see it kind of move out. I think rates are going up. I'm not arguing that. It's the timing of the rates, right? And when it actually affects that affects the bigger picture, the stock market, the growth stocks, the discounted cash flow, all that stuff that people are talking about, like it's going to happen overnight. And we've already discounted. Some of these stocks are down some crazy amounts. We've already discounted a lot. So that's the one chart I'm keeping an eye on. Once we cross that 1903, I think you'll see a different tune from me. But for now, I'm just watching that level. Why can't we break it, right? So if you're so bullish on rates, why aren't we breaking out, right? If you're looking at this on a yearly chart, you can see it here, right? That's the yearly high. We're still kind of sitting kind of in that middle, but you have that inside and then up. So I think by the end of the year, we'll definitely be pushing higher, probably towards this like 2.8 rate or something like that. But I don't think it's ready yet. So that's the one I'm watching. And the other one that I kind of, this is my own kind of nuances of trading and what I see is I've been doing this, I don't know, 11, 12 years, and have looked at thousands and thousands of charts and price action. And what's always stood out to me is when Apple tops out, the market tops out shortly after, right? And this time around, Apple hasn't been topping out.
Right.
It's actually been acting strong.
Yeah.
And it's something to kind of keep in mind, right? So like if you're looking back at here, I'm trying to show, I had it before, but
and I added some Apple last week. I was hoping I would get a little bit more at a cheaper discount, but just too strong. Just too strong.
It's way too strong. But here's COVID, right? This is COVID 2020. This was Apple right here making all-time highs and then not making all-time highs at all, while the Qs kept trying to push up, as you can see with the gray line, right? That's the comparison line. And then when Apple finally broke down, the Qs kind of joined along with the ride. And that makes sense. They're a big part of the Qs, all that other stuff. So you gotta be thinking with Apple's strength here, the destruction underneath on the Qs, or the NASDAQ, in this case, the NASDAQ composite, is monumental, because what is it? They own like 11% of the index,
Yep.
right? So, or something like that. And so if this is behaving strong while this is dying, you can imagine the pain that's going on underneath. Obviously, we've seen it and stuff. So this is the one I'm keeping a track on. If you go out to the weekly, the last time we kind of saw this divergence, I have it kind of highlighted here, where the Qs on the weekly were kind of like not doing well. But what was Apple doing? Staying fully steady the whole time, right? On the weekly. Yeah. And then when Apple started to break out, what did we see? We saw Qs break out pretty hard with it. So that's one of the charts that I'm watching here. And that's the comparison that I don't do a lot of comparison charts in general. I like to see stocks on them, stock charts on them on their own. So that's what I'll be watching here. And you saw their earnings reaction. That was a pretty solid earnings, man. Like, you can't even argue that.
And it even gave you a chance on Friday, right? Even if you didn't get in on Thursday or anytime during the week, it gave you a chance on Friday to buy options, to get long common. Like, it gave you a chance, and then it just moved.
Yeah, it was. Yeah, because how do you argue those earnings? On top of that, they're also a dividend player, right? So they fall into the value category and they're still crushing earnings, right? And so this was the chart that I was watching. What I've noticed over the last 3 to 6 months is that a lot of these bear flag patterns start to break before earnings. You'll see it with Peloton and stuff like that. So I was watching this for Apple because it looked like an inverse cup and handle, but were they going to break it before that? Were they going to break the handle before earnings and then just get destroyed into earnings? And if you were looking at this drawn as a channel, I removed it because I was doing some work, but if you removed it, it doesn't show here. I think it might be on the 65-minute chart. It didn't break the bear flag. Right before it closed, it closed right above it, right? So you can see that here, and then you can see the earnings. Whereas, like, if you were looking at, I don't know, Peloton before it died, of course, my internet's being great.
I mean, we only got about 10 more minutes here, GP, so you can just
so
draw it out by hand, instead of waiting on your internet.
I got it up here, but you see, this is the bear flag that I drew on Peloton right before earnings, and you saw it was breaking down even before earnings, and then earnings obviously just got crushed, and it's never looked the same. So that's what I was kind of watching, because I'd seen that over the last 6 months, these bear flags were breaking. But that's all I got.
Well, my takeaways where GP says that we go all in on QQQ and ARC calls. That's what I'm taking away from our conversation tonight. Nick, a little more hesitant, and me, I don't know what the hell's going on other than listen to GP since he's been right on the previous 2 calls. So
yeah, buddy.
Thank you.
All right, man.
Nick, what you got anything else to bless us with?
I was gonna say, like, just as you guys were yapping, I was kind of scanning charts. DDOG looks pretty damn good through 140. Just throwing it out there.
Show us what you see.
If you look on the weekly, it basically held that 120.
No, you show us. You take over and show us. DDOG.
It does look good. Nice basing action.
A bottoming process. Yep.
And the volume's coming in. It's nice to see.
Yeah, it just caught my eye. I'm sure
does.
If I connected the trend line here, there'd probably be something.
I must have charted this for because I've got lines made already. Not one that I normally keep up with too much, but yeah.
Yeah. Well, shit, I wish I would have had it on my radar. I didn't.
Go peek at the daily. I mean, it's overtaken that 9 EMA that I pointed out that Salesforce has too.
We can call that a bullish engulfing on the week because it gapped down and closed above the body. So
it was in a downtrend.
in a downtrend and the volume went up.
Not everything that's an engulfing is an engulfing.
I mean, you put in a low here, you got like a little bit of a ceiling there at 140, put in a higher low on Friday. I say your trades through 140. I mean, at the very least, you're going to get a quick.
Oh, the Bengals intercepted it in overtime. Oh, I'm sorry.
Yeah, they did. Oh,
wow.
But anyways,
I'm sorry, Nick. Sorry about that.
No, you're good.
That was excitement.
So anyways, yeah, DDOG. Just something that caught my eye when I was scrolling.
It fits the same area as Salesforce, so
yeah, totally.
Maybe that growth is dead for the next millennia is over with.
Yes, and nice bullish MACD cross.
Did you snap when you said yes?
No, I did not. No, I did not do anything. But yeah, nice MACD cross there. The RSI is diverging higher, so there's a lot of indicators that say it's the highest close we've had since 114. So 2 weeks or so.
It looks good.
Yeah, it does look good.
It looks good.
I'll be adding CRM and DDOG to my charts.
Looks good.
All right, so the futures are flat.
Yeah, futures just open and are flat. Yeah, that's important because we know that all these people who don't trade futures really look at every tick that the futures do as what the hell is going to happen. I want your guys' take on this. You got a couple more minutes. I'm actually going to hold you both hostage until we see who wins this ball game. But I look at futures, and I want your guys' take. But I look at futures as if it's one way or the other. I actually like the opposite of what's going to happen, right? So if it's down big, I actually like the market rallying into the next day or during the session, right? And if it's up big, that's a caution flag for me. That's just how I look at futures, because since I've been keeping up with futures, it seems like that is where the rug pulls happen. Is you're all bulled up, futures are up 0.5% or whatever, and it's happy days are here again, and then they just crush you during the session. So I'm interested in your guys' take on that.
Yeah, they're used to, when I first started trading, actually, I started out as a day trader, and there was a book written by this guy. His name was Tiny. I can't remember his website now, but he wrote a book called Power Living, Power Trading, I think. And it was there was a chapter that was super powerful on trading gaps. And I'm with you, kind of depends on the day. So if we're in an uptrend, I much prefer to see gap downs, and I want to see strength throughout the day.
Right.
And then kind of same thing on a weekly basis too. I love when Duzio talks about all his, stuff, but he'll talk about the sheep days, Monday and Thursdays. And so I'll know, I'd rather see a gap higher on those days, on Tuesday, Thursdays. And then same thing, vice versa on downtrends. I would prefer to see gap ups and then see them fade throughout the day. Just being that there's a rule generally that, if a gap doesn't get filled within the first hour of the day, the low of that first 60 minutes is likely to hold. And then obviously vice versa, the gap closing within that first hour is a pretty powerful something to keep your eye on. It's likely going to lead to just a trend, those all-day trend days. That's what that'll typically lead to. But anyways, yeah, I used to day trade gaps. That was kind of that was my go-to setup. Was basically I would look for biggest gaps up or down, anything with news on it, and then I would draw on the highest, fastest moving names I could find. Thinking about it, it was research in motion.
First
Anyways,
stock I ever traded.
yeah, right. I just draw a range for the first 30 minutes and the first 60 minutes, and then like I try to find the prettiest looking ranges, and then if you're either long above the high of the range or you're short below the low of the range. So I don't know, just my kind of 2 cents on gaps. I'm kind of with you though.
Yeah, I watch futures just so I know how much Vaseline to pull out the day.
Yeah, totally.
That's usually why I watch futures. I think just the introduction, like when I first started, it was monthly options, and then they went to weekly, and now they do 3 times a week. I'm sure we're going to get to hourly at some point in terms of options. I think it's distorted a lot of this stuff in terms of my market dynamics over the time. So I used to put a lot more weight into futures. I don't have a sense on whether it gaps down or gaps up. I like levels. I'm a pivot guy more than a moving average, or I use moving averages for, I think Cookie talked about it, is identifying trends,
Yep.
right?
Yeah, totally.
And I could care less if it's the 33-day moving average. If the 33-day moving average is what's been trending up and it's been holding, then I'll use that. It doesn't really matter to me. It's to identify. But I like pivots because price has memory, and I'm a fundamental believer in that. If it traded there, it will trade back there again, right? So like especially on those wicks and stuff like that, it'll come back and test. So that's where I am on futures in general. If you're I don't even know how to say it. Is it called the Ichimoku cloud or whatever?
Ichimoku, yeah, Ichimoku.
Yeah. Ichimoku cloud.
You missed my Ichimoku last week.
I think people start resorting to all kinds of indicators when they don't know what the hell's going on, but that's me in general. If you're a cloud follower, we touched the cloud for the first time since March 2020, and we held it. So
above the cloud is good, below the cloud is bad. It's pretty simple.
Yep, and the cloud is trending up. So
yep.
It's just any pivot into that cloud is usually a good thing. If it breaks it, it breaks it, but it's trending pretty hard up. So it's just a lot of stuff that's there for you to kind of put the pieces together on where we could potentially be going.
Nice segue. Last week I was talking about the Ichimoku cloud with Bitcoin, and if Bitcoin closes above 38,000, it's going to be above all the EMAs on the 4-hour. Now it has plenty of it could close above the 9 EMA on the daily, and we're still well below on the weekly. But as we've talked about forming a bottom, Bitcoin could be trying to form a bottom. And if any of that sort of is indicative of what I saw last week, crypto kind of led where maybe some of these tech trades go. So just something for everybody to keep an eye on, and Bengals win. So
Bengals do win.
We'll end with that. Thanks again, guys. Always appreciate your time.
Thanks for hosting again.
Three straight weeks. I'm a lucky Swedish chef to have friends like you, except for you, Nick. You haven't subscribed to my newsletter yet, but anyway,
I will when I get on.
I'm just joking. I do appreciate you guys, and thanks so much for your time.
Thank you.